Are traditional expert calls in the investment world becoming obsolete? According to Stream, they are, and you can access primary research easily and efficiently through their platform. With Stream, you'll have the right insights at your fingertips to make the best investment decisions. They offer a vast library of over 26,000 expert transcripts powered by AI search technology. Plus, they provide competitive rates on expert call services, and you can even have an experienced buy-side analyst conduct the calls for you. But that's not all. Stream also provides the ability to engage with experts one-on-one and get your calls transcribed free of charge, all for 40% less than you would pay for 20 calls in a traditional expert network model. So if you're looking to optimize your research process and increase ROI on investment research spend, Stream has the solution for you. Head over to their website at streamrg.com to learn more. Thanks for listening, and we'll catch you next time. All right. Hello and welcome to the Yet Another Value podcast. I'm your host, Andrew Walker. If you like this podcast, it would mean a lot if you could follow, rate, subscribe, review it wherever you're watching or listening to it. With me today, I'm happy to have on for the first time, Mitchell Scott. Mitchell is the founder and portfolio manager at Choice Equities. Mitchell, how's it going?
Man, it's going great, Andrew. Big fan of the show. So thanks so much for having me. Great to be here with you today.
Hey, thanks for coming on. I'm excited to have you on because I've been bugging you to come on since we met in person almost a year ago now, and we finally got you on, and it's a really interesting one. But before we start talking about that, quick disclaimer to remind everyone that nothing on this podcast is financial advice. Please do your own research, consult a financial advisor, all that jazz. Mitchell, stock we're going to talk about today is Crocs. The ticker is CROX. I'm sure everyone is familiar with this. This is a really interesting one because, everyone's got a view on it. We'll talk about the bear case later. Tons of insider buying recently. It's cheap, but I'm kind of starting to ramble, get ahead of myself. So I'll just toss it over to you. Well, what is Crocs and why are they so interesting right now?
Yeah, sure. So, great to have the opportunity to talk about it. We try to buy quality companies cheaply, and I think that's what we've got right here. So, long story short, Crocs is basically the most profitable shoe wear brand in North America, if not the globe, of scale. And along with that, it actually trades at the cheapest valuation of its peers in the space. So there's a lot that goes in there. I've described it as the shoe people love to hate, and I guess you can describe the stock as the stock investors love to hate on occasion. But I think a lot of people tend to think it's a fad, and I'm sure we'll go into that at some length, or at least I think we should. But, we've come to a different view here, and I think that explains the valuation, but also explains the opportunity.
Great. So let's just start real quickly. I guess three things that are probably attractive about Crocs are, one, the insider buying. I mean, the stock has sold off after earnings, and you've got literally millions of dollars of insider buying. And you and I were actually responding on an email thread on an insider buy, and it would be like, one would be you and I replying, and then the next would be a new insider buy. It was kind of crazy. So, but the other two things are growth and cheapness. So why don't we just start quickly with the growth story? So kind of how quickly is Crocs growing? Where are they growing? All that type of stuff.
Yeah, sure. So I think that's probably an underappreciated element of the story. And, if this turns out to be a fantastic investment, it'll be because they really ported their playbook that they've been very successful here with in North America abroad. And so where they are today, the sort of traditional North American clog is really a little bit less than 40% of total sales. So they bought HEYDUDE, and we'll definitely have to spend a good bit of time talking about that. But that's about 24% of sales. Independent of that, they've got a handful of other drivers that are very important to the story. So I think maybe 60% of the sales are U.S. when you count HEYDUDE, but less than that when you don't count HEYDUDE. So you've got EMEA, Europe, Middle East, Latin America. That's 15-16% of the revenues. And you've got Asia Pacific, and that is about 15 to 16% as well. And so both of those regions are currently growing, 20s, 30s, and have been growing fairly steadily each year for each of the last 6 years. Layer in that a couple of other sort of product vectors. So they've got sandals they've been really focused on for the last several years, but really are only just now starting to push that and really get traction with that. And then finally, Jibbitz. And Jibbitz are a real big piece of the profitability puzzle that I think some people tend to overlook.
Can you just describe what a Jibbit is? Because before I would have known it if I seen it, but for people who haven't seen it or don't know, can you describe what a Jibbit is real quickly?
Yeah, sure. So it's this little charm, right? So all the Crocs that you buy, they've got little holes on them, and then this is a little charm that you stick in the hole, and it can be. So one of the really interesting ones they did was a KFC fried chicken, like a drumstick, and it actually, just like a scratch and sniff, it actually smelled like chicken. So that one was a really good one for them. But Star Wars themes, movie themes, cereal themes, sporting team themes, all kinds of just random little things that you find in pop culture show up as Jibbitz, and people buy them and they put them on their shoe, and they're actually very profitable. It's sort of like Fastenal selling a screw. It doesn't cost much, but it's pretty important. It's got a high gross margin on it.
Two questions about Jibbitz that are just popping to my mind. So again, these are the things, if you've got a Crocs, you think of their classic clog, they've got the little holes in them, and people literally, they released one with Barbie, right? So they were Barbie themed Jibbitz that went in the shoes. Two questions on them. Is Crocs the only one who can make Jibbitz? Or I'm guessing there have to be like 1,000 people making knockoff Jibbitz that go into these Crocs shoes.
They're out there. They've done a fairly good job of policing this.
So they have it, I guess not patented, but trademarked, where they can go on Amazon or wherever somebody would sell a knockoff Jibbit and be like, hey, you can't sell that thing.
Yes. Yeah.
How do they have that patented? Because I could understand how you could not use Crocs when you're marketing it, but if you were just like, look at this little big pin or something,
I think the enforcement of it can be difficult, right? But on the bright side, it is probably somebody selling just something for $5. So it's not a huge market, but it is a good market for Crocs. This sort of goes back to when they bought it. They actually bought it, I think, in 2007. It's been it was kind of an afterthought for a really long time. They spent $10 million on it, and ultimately started paying a lot more attention to it in the last kind of 4 or 5 years. But yeah, counterfeiting there is a risk. It's something that they're pretty attentive to, but
it's also something I could see being really popular. So Crocs is making a big direct to consumer push, and I could see it being really popular and really like kind of enforcing a moat where, hey, you get somebody on the Crocs app or whatever, and then you're pushing new Jibbitz to them all the time. You learn about their personality. Hey, this is a person who likes Star Wars. Ahsoka comes out this week. Let's push some Star Wars branded Jibbitz. Hey, this person bought Barbie. I don't know what's the next smash hit. I guess Barbie. Everybody watch. I haven't seen it yet, but I guess everybody watches Barbie. But you could see how you could push it, and it could be a draw to get people into the app, buying directly from them, which is going to be higher gross margin, forming that relationship, forming like kind of a sticky thing, almost razor blade-esque. Second question on Jibbitz. Do people, I don't have kids yet, but do people, when they wear them, are they changing them in and out every day? Like, I'm going to the Barbie movie today. Let me put a Barbie in. Tomorrow I'm going to Star Wars. Let me put some Star Wars in. Or do they kind of wear the same one for a month, 2, 3, 4 at a time?
It's kind of personal preference, and it's all over the map, right? So, some kids change them out more often than others, and, others don't. So it's really just kind of personal preference.
I'm so lazy. I feel like I'd say to myself, I'm going to do it every day, and then I'd never change it up. All right. So we talked about.
But then you kind of go to school and you want to show off your new Jibbitz, right? So there's your sort of counter to that.
So most of the people who are buying Crocs, actually, let's save that for the bear case. So we've talked growth, right? You've got the Crocs brand, the HEYDUDE brand, growing nicely domestically, growing 20% plus internationally. So that's your growth. Let's talk valuation. And then I want to spend most of the time actually talking the bear thesis, because that's really where the crux of the stock is. But we are talking today, mid-August. The stock is trading just under $100 per share. Can you talk to me about the bear thesis, or sorry, the valuation for the stock?
Yeah,
my wife just walked in, so I got a little distracted.
Yeah, no, that's okay. Well, it's trading very cheaply, right? So the bears seem to be in control, at least of the stock at the moment. So it's trading at 8 times earnings. And what is it, 7 or 8 times EBITDA, 10% free cash flow yield. So things that have runways for growth that are profitable companies tend to not trade at those kind of valuations. So there's obviously an argument here, right? So I can sort of kind of talk about a little bit more, what we see happening, or we can jump into the bear case, but that's kind of where it's trading right now.
Just on valuation, I would just throw in, and you're welcome to add here, this will become growthy retail and consumer goods brands generate a lot of cash flow. Eventually, this will become a capital allocation story. We'll talk the HEYDUDE acquisition later. That'll play into capital allocation. But I would just mention it's a $6 billion-ish market cap. And in July, in their earnings release, they said, hey, we bought 50 million of stocks and 50 million of stock in July. You run rate that for a full year. That would be, we're buying 5% plus of the company every year. It's just, I'd throw that in.
Yeah, no, that's right. So, and they've got $1 billion authorization on the repo. So that's 15-16% of the float outstanding. And they've bought aggressively two other times in history under basically the same board. So it's kind of in their DNA. They like to buy shares, especially when they think they represent value. And it goes back to, to me, probably the bear case, you kind of got to go all the way back, and maybe we'll talk about it, maybe we won't if you want to delve into it. But you got to go back to sort of the Blackstone investment and when Andrew Rees came in as president and then ultimately became CEO. But one of the first things they did is they did the PIPE, the private investment in public equity, and then they used that and they bought a lot of the shares back and shrank the float dramatically. And then, so that was the first iteration of them with the big buyback. And then they've done that a couple of times since.
And now, a quick word from our sponsor. Are traditional expert calls in the investment world becoming obsolete? According to Stream, they are, and you can access primary research easily and efficiently through their platform. With Stream, you'll have the right insights at your fingertips to make the best investment decisions. They offer a vast library of over 26,000 expert transcripts powered by AI search technology. Plus, they provide competitive rates on expert call services, and you can even have an experienced buy-side analyst conduct the calls for you. But that's not all. Stream also provides the ability to engage with experts one-on-one and get your calls transcribed free of charge, all for 40% less than you would pay for 20 calls in a traditional expert network model. So if you're looking to optimize your research process and increase ROI on investment research spend, Stream has the solution for you. Head over to their website at streamrg.com to learn more. Thanks for listening, and we'll catch you next time. It's a board that, again, we'll talk HEYDUDE in a second, but I do think it seems quite astute on capital allocation. You mentioned the prior buybacks. If you look at a chart of their share repurchases, I think you were probably the person who shared it with me. But, when the stock's 150, you see all the insiders selling. And then when the stock's 100, you see all the insiders buying. And, you can see different variations of that trade over the past few years, which it's really interesting when you've got a board that's shown some financial sophistication with their insider buys and sells. They're buying back stock now. They're doing insider buys now. But I'm giving the bear case for you. The bull case for you. Let's turn to the bear case, because I think that's really the most interesting thing, right? Everybody can agree this is a nicely growing brand that's trading cheaply. I think the bears would push back on a lot of pieces of what we talked about. We can go any place, but I think the number one place to start would probably be a bear would say, hey, this is a clear COVID beneficiary. During COVID, everyone wanted to be comfortable. Are they in a better spot now than they were before COVID? Sure. They've got a lot more people who were exposed. It's a little more socially acceptable to wear your Crocs to school or wherever. But I think a bear would just come to you and say, hey, 2019, this was a 50% gross margin business. Today, it's a 60% gross margin business. 2018, this is an 8 to 12% EBIT margin business. This year, they're guiding to approaching 30% EBIT margins. And the bear would say, look, you fast forward this a year or two, everybody who wants a Crocs probably already has a pair of Crocs. This was a huge COVID beneficiary. As those trends kind of unwind, you're looking at a business that is way over earning. Their sales have exploded. I think this is coming back, and you guys are talking 8 times this year's earnings. I'm looking out 2 years from now, and I think 2 years from now looks closer to 2019 than 2022, 2023. So how would you respond to that?
Sure. And, I hate to sort of piggyback on the thing I said for the last question, but to me, they are somewhat similar answers in that the company over the last 7 years has really become a much, much better company. And so a lot of this goes back to sort of the first things they did in kind of 2014, 16. They've got some good slides to it. But they took out 80 million of fixed costs. They shrunk the SKU count by half. They shrunk the store count by a third. And they had, digital sales were like 10% of the mix. And so now they're 45 and probably going to 50, 55. And so those are more profitable sales. To your point about the margins, so those major sort of elements in terms of the restructuring, making the company more efficient, more profitable, those things had all been done kind of like 14, 15, 16, but they didn't really have the sales falling down, and showing up on the income statement at high incremental margins the way that they wanted. And they were growing, but they were really only growing sales 7, 8, 9%. So there was a huge benefit, particularly in 21, at the top line from, pandemic goods spending. But good for them. They put themselves in a position to capitalize on it, and they did. But, even independent of that, the whole body of work, I think, paints a picture of a management team that's become very adept at meeting their customer, marketing in creative and clever ways, building sort of recurring demand. So I think half the shoe purchases at some point, if you're not counting sort of new growth markets, are probably some form of repair replace. So replenishment, right? So there's that element. And then, we talked about Jibbitz just a little bit, but Jibbitz were basically an afterthought. And, I think they're adding somewhere between 500 basis points to the gross margin line that falls fairly neatly down to the EBIT line. So, if you compare it to a company like Deckers, what you see is Deckers margins, the two companies' margins tend to be on a similar profile, but then there's a separation there in 2020 where Crocs and I think Jibbitz to some degree really drive that separation.
Let me ask maybe a stupid question for somebody who follows the company, and maybe this is the equivalent to saying, hey, Nike makes shoes and sells Air Jordans for $200. Why can't I buy, the Chinese knockoff Air? What would a Chinese knockoff of Air Jordan be? Air Judans or something? I don't know. You're replacing the O with a U. But why can't like Crocs? Why can't you just buy the cheaper knockoff brand or something? Because I do remember when the first 2008, 2009, the big spike happened, and they had a lot of trouble they were selling Crocs in grocery stores and stuff, but you could find Crocs that were knocked off. You could find Crocs knockoffs everywhere and replace them. Why aren't there more like Crocs knockoffs? Because it's not a hard product to make or copy or anything.
Yeah, it's a great question. I mean, there certainly are some that are out there, but they do have some forms of protection, and they're certainly going after people where they're seeing these things pop up in size and scale. So, I think about natives. I mean, they look, for little kids, they look a lot like Crocs, but that's part of the deal. You see that time and time again, right? So it's up to the company to be vigilant about that, do the very best they can to minimize those sales, to go after people and enforce that where they can. So, they've got the resources to do that, and they're doing that. So that's up to them. And, it's something you always think about, but it's not something that's not on their radar.
Just Air Jordans. I was replacing the O with a U, but I think maybe it would be Jordans, but neither here nor there. So Crocs, a lot of people would say COVID beneficiary. And I do wonder, Peloton was a huge COVID beneficiary, right? Everyone was buying a bike in 2020 and early 2020. That fell off. Is there something to, hey, Crocs, like, yes, they grew like crazy in 2020, 2021. But as you said, a lot of the repurchases are replacements. In 2022, they still grew. 2023, they're still growing. Is there something to, hey, they're growing through it? They've kind of proven out that they weren't just only a COVID beneficiary, or would the wall be like 6 months away or something if they were going to run into a wall?
That's a great question. And I'll talk about this with other investors as well. I mean, you would have thought they would have run into the wall by now, right? So, 2020, 2021, 2022, 2023. So 3 comps in a row, they've continued to grow here in North America on kind of the core product. So, even just doing some channel checks recently, the feedback was the same, which is they continue to grow the core product, which is pretty astounding. So there is some repair replace. There are some kids, they get older, shoes wear out, but they've done a really good job, maintaining relevance and interest with their customer. And then in addition to that, they've got new kind of silhouettes. They've got sandals, just kind of all these little collaborations, the way they sort of market the stuff. So Barbie's a decent example. It was a limited run. It was really only available for 2 days, and that was intentional. They wanted limited distribution to capture sort of the imagination and the mind share of their customers, and not everybody could get them, and that was intentional. So they kind of do that to perpetuate the brand and the sales.
There was a really interesting quote in their last earnings call where somebody was saying, hey, you guys basically discount once a quarter, or you let your retailers discount once a quarter. Aren't you training your customers to wait for a discount and then buy the shoe? And they said, we don't see that in the numbers. And, I think that's kind of silly because Apple discounts only on Black Friday or whatever. And nobody said, a lot of people do wait for Apple, but Apple's doing just fine with people waiting for after Black Friday. But Crocs said, hey, we don't see it in the numbers. And even more than that, we train our customers, as you said, when we do a Barbie drop, 2 days and then it's gone. When we do a seasonal drop, when we do some colors drop, you need to buy it then or else it's not going to be there. So you can't wait for a sale. I just thought that was really interesting. And a lot of times that is the sign of real brand power, right? Customers don't wait for the discount because it speaks to them and they really want it. I'll let you comment there and then I've got plenty more questions.
Yeah, no, that's exactly right. And look, it's the number one thing I think about too, right? I mean, that's a brand. And so, it's very difficult to build a brand. I mean, some of these things are sometimes almost historical accidents, right? But this brand, like if you and me and 10 other people sat in a lab and we all back in 2004 and we wanted to create the most comfortable shoe and profitable shoe, I don't think in a million years we would have come up with this exact little iteration, right? But they did 20 years ago, and then it sort of found its way into the culture. People got really comfortable with it because it is a comfortable shoe. But now there's 20 years of people. I mean, they've sold 1 billion pairs of these things. That's a lot.
Have you heard the Idiocracy story?
No.
Oh, what sort of Crocs investor are you if you haven't heard the Idiocracy story? So Idiocracy is this comedy, which is quite funny. It's about what happens if some average Joe gets frozen for like 5,000 years and he wakes up and the country is just the dumbest country in history. Like everyone's got an IQ of 30. So he's the smartest man on the planet. Anyway, so that's what everyone is. And at the time that Idiocracy guy was filming, they had a very small budget. And he said, I need shoes that are really stupid. And he went looking and he found this startup brand. And he was like, these are the ugliest, stupidest shoes I've ever seen. And he had all the actors wear Crocs all the time when he filmed them. And between filming and releasing, Crocs blew up and it was the first wave of Crocs. So he's like, nobody's going to get the joke that these are the stupidest shoes on earth, or people are going to think I intentionally chose these, but I was just trying to get something really ugly. So I thought that was so funny. Switching, so I think the typical customer these days is quite young, right? Like teenagers, my imagination. How much of sales are going to teenagers for the core Crocs brand?
Probably in the neighborhood of 30 to 50.
Okay.
But so I think that's where they started out, right? Over the years, what you've seen is it's become a little bit more widespread.
Yep.
And then there's a bolus of people that bought, 10, 12 years ago that are continuing to buy. So the sort of distribution of the customer set has broadened.
Here's my worry. It's popular with teenagers today, but teenagers are fickle, right? Like Abercrombie & Fitch is popular in the 90s for 3 or 4 years. But then your teenagers become young 20s and the teenagers behind them say, oh, I don't want the Abercrombie & Fitch because that's, my older brother, or that's for the olds. I get something new. And I worry this wave is not so much COVID beneficiary as it is like this wave of teens and the next wave of teens aren't coming. So you kind of, I guess the question I'm asking is how much of this is fashion risk or age out risk?
Very much. I mean, it is definitely the bear case, right? And it is first, front of mind for everybody. So, a couple of things I'll say about that. I mean, I think we're all looking at this. I think management's also very attuned to this. B, they've been working to broaden their portfolio because of this for a long time. So they've done that. So now let's say 30% or whatever. So within sort of the Crocs mix, some of these are used as garden shoes. Some of them are used as house shoes. And then some of them certainly are worn more stylistically. And so what I would say is of that sort of 30 to 50% of the mix, maybe half of that is the fashion risk, right? So now you're down to 15%. And then that 15% is really 40% of the whole company sales. So, you're getting into sort of 10% of the top line that's sort of at risk and that sort of framework. So, it's a risk. But again, they're thinking about it. They're doing what they can to continue to stay relevant.
Yeah. And, I guess one of the bets you're making is, I can just think of in the past few years, there was the Heeley shoes, right? I guess those might've been a little younger than teenagers, but the Heeley shoes were selling off the charts for 2 years and then those went away. Skechers had the Kim Kardashian shape up Skechers and and you can see these in the stock charts too, right? Like the Skechers go up like this, or they have the shape ups and then they've got the really comfortable shoes for, I think, a little bit older people that Joe Montana was pitching, and they go like this. And I guess the bet bears might think, hey, this is some people think it's COVID, or some people think, hey, it's just like Kim Kardashian Skechers over again. The bet you're making is this is a real brand. And so far, it is sustaining. It does see it. Let's see. Let's go to the other. So late 2021, Crocs is on fire, right? The business is growing like crazy. They've got the international growth story. They're pitching off tons of cash. They've got the Jibbitz, all this sort of stuff. And then they buy HEYDUDE for a business that I don't think many people had heard of. I certainly hadn't heard of it. I remember at the time I had some friends who were bearish Crocs. They're like, look at this. As you said it, I think in your letter, they just went, Crocs buying HEYDUDEs is going from fad to fad squared in a lot of people's eyes. They pay a big multiple for it. It's a really growthy brand. And I think a lot of people looked at that skeptically. And this year, HEYDUDE seems to, not that it's struggling because it is going to grow, but they cut out a lot of what they say are low margin sales. They're having some ERP integration issues, some inventory, all that. So I think a lot of people look at the HEYDUDE and they say, hey, is management skeptical of the Crocs story by buying HEYDUDE? And also, hey, does this reflect strangely on Crocs' capital allocation acumen? So I guess I'll just pause there and toss it over to you on the HEYDUDE front.
Yeah, so we'll definitely have to dive into HEYDUDE. What's I guess most interesting about this is, and we didn't really get involved in the stock until sort of spring, summer time last year. So sort of post the HEYDUDE massacre in the stock. And there was a number of things, just kind of pattern recognition you see in the market from time to time, right? Like sort of a top of the deal, top of the market, you add leverage, do it in December. I think they've been out basically telling people they were probably unlikely to do any major deals a week or two before, and all sort of the recipes there to create a pretty meaningful decline in the stock, right? Layer into that the notion that there's a large set of investors out there that are looking at that and very plainly seeing that as justification that management thinks the Crocs brand's best days are over, right? So all these things sort of dovetail together. And now sort of fast forward to today, to some degree, what's happened is the bear case is kind of flip-flopped. So over the last 2, 3, 4 quarters, the Crocs brands continued to outperform expectations here domestically, but also internationally. And HEYDUDE had very high expectations. They went from 200 to 500 to 900 to 1.1 billion in sales this year, basically. But then all of a sudden now, based on sort of some channel dynamics, which we can talk about, now it looks like they're down 3% in the coming quarter. So basically it appears, if you're not willing to really dig in and try to suss through the channel dynamics, it appears as though the brand was streaming hot and has come to a scorching halt. And so now the bear case is being driven by HEYDUDE. And then to your point, it's calling into question, management acumen around capital allocation and their ability to do deals smartly. So we can dive into the finer points of each of those. I'll let you pick.
No, that's great. I guess I just wonder, how do you think about I'll just let you dive into, how do you think about the HEYDUDE acquisition and HEYDUDE go forward, what the management's doing?
Sure. So, it's another $1 billion shoe brand, and there's really not that many of them. Depends on sort of how you cut it, but there's 10 or 12 in North America, something like that. And so now they own 2 of them. And, nobody had heard of them. It's got a pretty interesting background. It's founded in Italy, making shoes in China, selling them in America. And so then, management paid $2.25 billion or 15 times EBITDA. And so, it's very easy to understand how in the very short term, people wouldn't feel very good about that. So, but what are they doing now? There's certainly been some moving parts, and maybe everything hasn't gone incredibly smoothly and relative to forward expectations with the integration of the company, but they're putting sort of the Crocs playbook into work here. And it's a pretty good playbook. It really revolves around being efficient, controlling distribution, managing the inventory in the channel, and then, very savvy digital marketing. I mean, all their marketing spend is 100% digital, and it's, celebrities, hyperlocal influencers, and these collaborations. And, they've spent some money. They're moving HEYDUDE into a distribution center in Las Vegas. They've got some other things going on. There's some channel dynamics we should probably talk about that are, to me, I don't want to say small picture, but they're the worry of the moment that, arguably in 6 or 12 or 18 months, everybody will look at and say, oh, well, that was maybe not that big of a worry, and maybe created a pretty nice buying opportunity. But look, bigger picture, I mean, it's 1.1 billion in sales. It does a high 20s op margin. It is similarly profitable to Crocs. The average owner of HEYDUDE owns 4 pairs, so they've got
Who is the average owner of HEYDUDE?
Basically everybody that's on the Dude Perfect channel, and we'll talk about that too. But probably starts in between 12 and 15 and skews up into 40, 45, but I would say, and primarily male. But within that, I would say, the real sort of, meat of that curve is kind of the 18 to 35-year-old male.
So just so I texted you, I bought a pair of HEYDUDEs this morning for due diligence. I got them on Amazon. Unfortunately, they didn't come in time for me to hold them up in the screen. But, I think the bear case is my wife got an email saying, hey, you got something on Amazon. She just sent me a screenshot of the HEYDUDEs and she said, ew. And I said, it's for podcast research and I need something to walk our dog in. And she just responded again, ew. So, there is the bear case, though. I've always thought there is something like Crocs and HEYDUDE. It is something that your typical Wall Streeter would not wear, probably wouldn't be caught dead in.
Yeah.
I have always thought there's something to buying stuff that a typical Wall Streeter doesn't understand, wouldn't buy, that type of stuff. And Crocs and HEYDUDE certainly fall into that category.
Very much so. There's a bit of a Peter Lynch leggings element at play here.
So, and HEYDUDE, this just might be because, I haven't seen it as much. I don't know why. I bought some on Amazon, and we can talk about the Amazon gray market problems they had as well. But I bought my pair on Amazon for, I think it was $35 on sale. And it looks like a fine shoe. It kind of looks like a knockoff boat shoe or something. But I do wonder with HEYDUDE, even more than Crocs, because Crocs, at least it's very visible. It had that big spike. Everybody can recognize a Crocs. When I say HEYDUDE, again, it might be because I just don't know it, but why don't they have a knockoff problem? Like I could find I think Hoka is very popular. They've got some shoes that look like this. Like, why don't they have a knock-off problem?
Yeah. So generally it kind of comes down to the brand, right? Is the brand powerful? And, does it matter to people if they wear the knockoff or not? So certainly with HEYDUDE, there are competitor shoes out there that look like them. And so that's a problem for everybody that competes in the shoe-wear business. Nobody's got a stronghold on the whole entire shoe market. So there are competitors out there for sure.
I can see some Chinese knockoffs that are HEYDUDE, but dude is DOODE. Like I could see those getting real popular.
Hey Schmood, yeah. It's certainly something to monitor. But there is a brand there. The average person has 4 pairs of, the average owner of HEYDUDE has 4 pairs of HEYDUDE. So
what do you need 4 pairs of HEYDUDEs for? Because they are kind of rubber and quick drying, aren't they? Is it just because you're going out into like muddy fields so frequently you need them? Or I guess style, you need blue, black, gray?
It's more the style element. Okay. It's also the price point, which allows that. So good for you. You got your shoes at 40% off. But, if they're 60 or 65, which is sort of the average ASP of the retail, you can get 2 or 3 or 4. If people are accessorizing their shoes these days, so sneakerheads, what have you, that sort of phenomenon, is probably applying here, and is why people own more than 1 pair.
Let's see, what else should we talk about? Yeah, I think we've hit a lot of the questions. I guess just when you look at this, like, how do you think, again, it's tough. It is tough to disprove hey, this is this is Crocs. They already had one hyper growth cycle in kind of 07 to 09 that ended in tears when, as we said, they were selling them out of gas stations and everyone had them. And they were basically like, buy a pair for $5 and took a long time to recover from that. How do you think bears ultimately kind of, I hate to use the term get defeated, but how do you ever climb that wall of worry that this is always 1 quarter away from a huge rollover, inventory starting to pile up, huge discounting, turns out to be a fad?
Yeah. That's part of what's in the valuation here today for sure. But it's just, time and execution, really. And, if they buy back 15% of the float and continue to post double-digit top-line growth, that's a tough thing to short, right?
I don't do a lot of shorting. I'm with you though. I think I do hear I hear the concerns over cyclicality, inventory, all that sort of stuff, but it's also like, hey, it's 8 times price to earnings. It's growing and they're buying back shares. Like, can't we go short? Like, what was the REIT that had all their income was coming from related parties? Like, that seems probably better than an 8 times, instant brand name recognition company that, as we've mentioned, people are still buying them, despite it seems like it should be easy knockoff material. People are still buying them. They haven't had that issue. So
yeah, that's what I would say. So don't want to move off of HEYDUDE just yet. So a couple of things to think about. I mean, so the brand is young. Most of all these sales, they've sold about 100 pairs of shoes so far. But, if you look back to the beginning of 2022, they had basically nil presence in California, which, California's a pretty big state and it's on the coast, right? Roughly the GDP of France. So they had no sales in California in a market that arguably would be a good fit for them. Even now to this day, the 5 people I talk to in California regularly, none of them have still heard of HEYDUDE. So there's an opportunity there. Another element is some of the marketing that they're doing. They're just now kind of putting into place kind of some of the Crocs marketing muscle. So they've got some SEC football stuff coming. My understanding is maybe there's some name, image, and likeness deals with some athletes.
Great market for a brand that kind of looks like a boating shoe and is everyday lifestyle brand. Absolutely. You went to Clemson, if I remember correctly, right?
I did. Hopefully we can get them linked up with the folks at Clemson too. That would be
That's
great.
What you need. Like, get Dabo Sweeney wearing a pair of HEYDUDEs on the sidelines. That's what you need.
Yeah. So, it's a marketing agent. It's a marketing company, right? So if they have marketing muscle and a good product, they can continue to drive. I mean, that's, Nike calls it demand creation expense for a reason, right? So just last week, they announced this partnership with Dude Perfect. And so that to me seems like something that people are not talking about that might actually be a real needle mover for the HEYDUDE brand. And so I spent kind of the weekend reading about Dude Perfect, and they're awesome. I watch them with my kid. They're super entertaining and, not offensive and like generally fun loving people, right? So good brand ambassadors, but I had no idea how big their reach was. So they have 100 million subscribers across all of sort of digital social media channels, 60 million on YouTube. And even more surprising to me than that was half of that 60 million on YouTube is international. So, ever since HEYDUDE showed up under the Crocs umbrella, I've been wondering, kind of asking around, people have been thinking like, what sort of international legs does this have for HEYDUDE? And that's actually a pretty decent lens and a way to look at the market, right? I mean, there's arguably 30 million people. I'm not saying it's one for one, right? But even if you just get half of them, right? That's 15 million people that are not thinking about buying HEYDUDEs, that the sell side is not thinking about buying HEYDUDEs.
I do hear you, but who is it? NASDAQ did a collaboration with Crocs, right? And I'm sure NASDAQ has like 100 million Twitter followers or people who listen to it. And while I do hear you, I also wouldn't be like, 50 million of them are international, so 25 million of them. Like, I hear you on the brand, but it is tough to create like Dude Perfect's YouTube followers to how much. But I certainly hear where you're going. Let me actually switch to something different. So all acquisitions, right? There needs to be a reason for you to be the best acquirer. And I think one of the reasons people saw Crocs buying HEYDUDE for a high multiple is they hadn't seen it before. It was a pretty eye-popping multiple for a very growthy brand. But I think people also saw, hey, Crocs, like, you've got this growth business that you can execute yourself. People were worried, hey, are you just trying to diversify out of a fad? But I think the other is, why is Crocs the best buyer and owner of HEYDUDE? And it sounds to me like you think Crocs almost has a mini process where probably not just with HEYDUDE, they could go buy 2 or 3 more growth brands and apply the Crocs playbook. So more DTC, more marketing, getting direct apps, getting these partnerships going. Sounds like you think this could be almost a mini shoe brand conglomerate, if I'm saying that correctly.
Yeah. I mean, I'm not necessarily advocating for them to go buy another HEYDUDE today. Let's digest this one, right? But look, all the sort of critical pieces are there, and I think that's what they were thinking when they bought it. My understanding is it was a PE auction primarily financial sponsors, and Crocs was the only one. They sort of weaseled their way into the auction, and they were the only strategic that saw it, which is somewhat interesting. So, you just think about the distribution channels, the marketing muscle, the know-how, and the brands do have some overlap. I don't want to, get too carried away with that, but there is some overlap there. And there's some, low price point. There's some commonalities where you can see that, hey, maybe this does make a little sense for them to be together rather than just any old shoe brand, right? But, you got the distribution synergies, you've got the marketing synergies. And, it looked like they paid 15 times. Now it looks like they paid 8 times. And, leverage was 3.25, and now it's 1.7. So they've delevered very quickly because they've been able to generate a lot of cash.
And if I remember correctly, what they were saying at the time of the acquisition was, hey, I know it's a huge number on this year's earnings, but this is a brand that's growing 25, 30, 40%. Even before we put the Crocs playbook and get any synergies off that, you run this forward 1 year, you get some operating leverage. Like, this multiple is going to look reasonable really quickly. What do you think the end game for Crocs is, right? So 3, 5, 7, 10 years out, is this a public standalone company that maybe has gone and bought 1 or 2 more brands and they're just growing and everybody thinks of Crocs in kind of the same way they think of a Deckers or something? Or do you think it, a sale candidate to a bigger kind of consumer brand conglomerate? Like, how do you think this ultimately plays out?
Yeah, and I've heard both. I've heard rumors around, certainly nothing imminent. I don't mean to suggest that, but like down the road, maybe it makes sense for them to get acquired. Maybe some of the sort of...
Who do you think would be an acquirer? Like, I don't think a Nike would be an acquirer or an Adidas. Like, it's a strange fit to imagine.
Yeah, I don't know. You could see Nike. I mean, they're doing a similar thing with the Jordan brand, right? I mean, the sort of sneakerheads, and I mean, how many sneakers does the average sort of sneakerhead type buyer probably?
I'm not a sneakerhead, but my understanding, I mean, you see the people with closets full of sneakers.
Yeah, I know them. I know plenty of them, and it's not like 7; it's like 17 or 27. So, maybe there's some similarities there. Maybe Decker. I don't know, but if they continue to grow and reach a certain scale, at some point the buyer pool will start to winnow down. So, I don't know. I'm thinking about it mostly from the perspective of this kind of 3 to 5 year window. And if they can do what they've set out to do and accomplish sort of the expectations they've set for themselves, that always worries me a little bit. Like, treat the management plan as the upside plan, right? But they've done a good job of hitting their targets, and so those targets imply some pretty impressive earnings and cash flows.
Yeah, I just wonder because I guess there is Skechers and Deckers, which do have like Deckers. They kind of incubated. I think they bought it for a song, but they kind of really grew the hookah brand. Skechers, I don't think has anything other than Skechers at this point, but it is rare to have like a one. It would be 2, but kind of like one overarching brand, footwear brand thing.
Yeah.
Actually, speaking of that, Nike is not just footwear, right? A lot of it is apparel and stuff. Is there a Crocs apparel business down the road or something like that?
I don't know. I like the footwear business. I like the businesses they have.
Yeah.
And footwear to me is a better business than apparel for a number of reasons. I mean, the margins and then kind of the replacement, it's a little bit less competitive. And, at least in these 2 cases, I think they've got pretty good brands there. Just shirts are pretty tough.
I'm imagining a Crocs shirt with just holes all the way down it or something, I
can see that with some fried chicken Jibbitz on it.
I like that. Yeah, the KFC fried chicken, it's so genius because it happened 5 years ago. And when I was researching it, it was like the first thing that popped into my mind. And I think they go for hundreds of dollars if you want to buy one these days.
Yeah, right? That's my understanding too. You got to buy them on eBay for ridiculous prices.
Yeah, look, on an acquisition, again, it's this one shoe brand, and that is kind of an odd duck. Not that there aren't any out there. It is a little bit of an odd duck in the markets, but at the same time, like, if they keep growing like this, they're going to generate a lot of cash, and all you need is a lot of cash, and you can do really well for your shareholders. And on the acquisition front, I don't know if Tapestry or whatever it is buying Coach. I'm not sure I would have thought of that a few months ago, but there's always buyers for good brands that are growing and throwing off cash flow. And if you're someone else who sells through Crocs' distribution channels, there are going to be a lot of synergies. And whether it's you buying Crocs or them buying you, like there are going to be synergies, reasons to combine, that type of stuff.
Yeah, very much so. I think you're right. I mean, when what you're seeing is sort of in response to Louis Vuitton, all these guys are trying to put more good brands under one umbrella so that they can continue to compete. And so, that just, that and sort of the digitization of these channels, I think makes the brands more valuable on a sort of a secular basis.
And now a quick word from our sponsor. Are traditional expert calls in the investment world becoming obsolete? According to Stream, they are, and you can access primary research easily and efficiently through their platform. With Stream, you'll have the right insights at your fingertips to make the best investment decisions. They offer a vast library of over 26,000 expert transcripts powered by AI search technology. Plus, they provide competitive rates on expert call services, and you can even have an experienced buy-side analyst conduct the calls for you. But that's not all. Stream also provides the ability to engage with experts one-on-one and get your calls transcribed free of charge, all for 40% less than you would pay for 20 calls in a traditional expert network model. So if you're looking to optimize your research process and increase ROI on investment research spend, Stream has the solution for you. Head over to their website at streamrg.com to learn more. Thanks for listening, and we'll catch you next time. Anything else we should be thinking about with Crocs?
There's a lot to think about. We didn't really talk too much about the gray market, for the HEYDUDE stuff. I think that's somewhat.
Let's talk, because look, I got the Amazon piece prices pretty cheaply. I think I bought directly from HEYDUDE, but I'm not sure. Let's talk about it, because it was kind of critical to the strategy and why the business is kind of slowing down a lot this year. Let's just quickly address the HEYDUDEs, how they shifted the wholesale channel and what the gray market is.
Yeah, that's right. So basically, when they bought HEYDUDE, I think HEYDUDE was using only one distributor, and those people that had access to HEYDUDE were really excited to have access to HEYDUDE. And then Crocs bought them, and then Crocs kind of came in and sort of puts the Crocs playbook on that, and that is different than the Crocs playbook. So they de-emphasize some vendors and merchants and sort of emphasize some other vendors and merchants. What that created was a dynamic. There was a very large sort of sell-in last year, so in the kind of the wholesale channel. So that created a kind of a tough comp for them this year, which they're lapping. And so, a handful of extra pairs of shoes out there. But mostly what it did is the people that got sort of kicked out of the network, some of them are no longer allowed to sell online, etc. They were happy to have the HEYDUDE relationship, and then they're kind of ticked off that they don't have the HEYDUDE relationship. So, basically they're dumping them all on Amazon for, whatever they think they can get for them. So, Crocs said that they've been putting a stop to that basically over the course of the last 2, 3, 4 months. So my sense is that we're starting to see the end of that. There's still maybe a handful of sort of extra shoes out there at some retail channels, but in the context of a business that, online is continuing to grow mid-30s very healthily. So there's plenty here to suggest that this is kind of a small sort of channel lapping issue and less endemic of a brand that's not as sought after as maybe they thought.
And the nice thing is, if your brand's growing 10, 20, 30% online, you eat up all that excess inventory real quickly.
Yourself. Yeah, exactly. And so part of the multi-channel offering too is you can, adjust and position it where it can be best suited. So, and again, very underpenetrated in California and some of the other coastal states and internationally as well. So nobody's even really thinking about international sales. So, that's kind of the gray market issue.
Last one, and then I'll let you go. And look, I know you're not basing this on 1 quarter of an investment. I never base anything on 1 quarter, but it does just kind of strike me as interesting. Dick's Sporting Goods reported earnings this morning, and their stock was down 25%. They had inventory buildup. They mentioned, I remember this was CBS a few years ago. They mentioned, hey, we're having a lot of trouble with theft. And the reason I really mentioned Dick's, I think they sell some HEYDUDEs and Crocs, but the reason I mentioned them is because last year Academy, I remember, because I've been watching Crocs for a while, Academy rolled out HEYDUDE, and I specifically remember they said, the HEYDUDE rollout is the best rollout that we've ever had. I think that was in the Q2 2022 earnings call, if I remember correctly. That's from memory, so I could be wrong, but they said that. And I just wonder, when you see Dick's, Macy's, Warren this morning, it does seem like retailers are still kind of figuring out their inventory, slowdown, all that sort of stuff. Are you... Look, they reported earnings 2 weeks ago, so I hate to say, are you worried about this year's earnings? But are you worried about this year's earnings and kind of a inventory buildup or anything?
Yeah, sure. No, great point about Academy Sports. And then that was kind of the same feedback for most of the folks on the channel we spoke with. It's like, this thing's hot and we really want it and can't get a hold of it. Yes, that is a pattern that we're seeing across retail. They tend to, at least in recent years, all order exuberantly together and then all order cautiously together in unison. And so I think we're seeing a little bit of that here for the back half. Paradoxically, or in juxtaposition of that, I think what we're seeing, at least from the consumer, is that people are spending a little bit more freely in the second half and back to school than they were for the first half. So, that's probably a thing that can sort of sort itself out. As far as HEYDUDE goes, I don't believe they're in Dick's actually right now. They did just sign an agreement for Foot Locker for 400 of their stores. So still sort of early days there. And again, yeah, I mean, there's obviously concerns about the consumer. But, I think there's enough sort of growth vectors in here that management has embedded that they can continue to drive sales.
Perfect. I think we'll wrap it up there then. This has been a super fascinating one. It's so funny because on one hand, you can say, as we said at the start, insider buying, 8 times earnings, buying back shares, growing quickly. And then on the other hand, you can say, this is a fad. We've already seen it once before 15 years ago where they're riding a growth wave and then it crashes. And yeah, it's just a super fascinating one. But Mitchell Scott, Choice Equities, tag the Twitter account. Everybody can find him. Q2 letter was excellent. Sold out of Celsius a little too early though, but some of us missed the whole run. So, but Q2 letter was excellent. I really enjoyed it. And I really enjoyed having you on for the first time and looking forward to the next one.
Awesome, Andrew. Thanks so much for having me. A pleasure.
A quick disclaimer. Nothing on this podcast should be considered investment advice. Guests or the hosts may have positions in any of the stocks mentioned during this podcast. Please do your own work and consult a financial advisor. Thanks.